Gautam Adani, once hailed as India's richest man, now faces serious legal challenges. Adani is the chairman of the ADANI Group, a sprawling conglomerate with interests in ports, energy and infrastructure. On November 22, 2024, a US court indicted Adani on charges of stock manipulation and fraud. This sent shockwaves through the market and raised concerns about the future of the Adani Group. The Adani Group holds significant influence in India's economy. Its rapid growth and ambitious projects have drawn both praise and scrutiny. However, this indictment marks a turning point, putting the group's financial dealings under intense scrutiny. The charges against Adani, if proven, could have far-reaching consequences for the company and its investors. The indictment alleges that Adani engaged in a complex scheme to inflate the value of ADANI Group stocks. This alleged manipulation, according to prosecutors, allowed the group to secure loans and investments under false pretenses. The indictment further claims that Adani and his associates misled investors about the true financial health of the company. The news of the indictment sent shockwaves through the Indian stock market. Adani Group stocks plummeted, wiping out billions of dollars in market value. This sudden downturn reflects the gravity of the charges and the potential impact on the group's future. The indictment has cast a long shadow on Adani's legacy and raised questions about corporate governance within the group. The US indictment accuses Gautam Adani and the Adani Group of engaging in a sophisticated market manipulation scheme. The indictment outlines a pattern of transactions and disclosures designed to artificially inflate the value of Adani Group stocks. This alleged scheme, according to prosecutors, involved creating a network of shell companies and using them to trade Adani Group stocks. These trades, prosecutors allege, were not based on genuine market demand, but were orchestrated to create a false impression of growth and profitability. This alleged manipulation allowed the Adani Group to attract investors and secure favorable loan terms based on an inflated stock price. The indictment paints a picture of a calculated effort to deceive the market for personal gain. The indictment also alleges that Adani and his associates took steps to conceal their true ownership of these shell companies. They allegedly used a complex web of offshore entities and nominees to hide their involvement and avoid regulatory scrutiny. Prosecutors claim that these actions were deliberate and intended to defraud investors and lenders. The charges of stock manipulation and fraud are serious and could carry significant penalties if Adani is found guilty. The US authorities have indicated that they have gathered substantial evidence to support their case. This includes financial records, trading data, and witness testimonies. The Adani Group maintains its innocence, but the indictment has already damaged its reputation. The indictment of Gautam Adani has sent shockwaves through the investment community. Investors are now re-evaluating their holdings in Adani Group companies, leading to a significant sell-off of Adani Group bonds. This sell-off reflects a loss of confidence in the group's leadership and financial stability. Investors are concerned about the potential impact of the allegations on the group's future earnings and growth prospects. The indictment has also raised concerns about the regulatory environment in India. Some investors are questioning whether regulators were aware of the alleged market manipulation and whether they took adequate steps to prevent it. This loss of confidence could have broader implications for foreign investment in India. The Adani Group is now facing an uphill battle to restore investor trust. The group has denied any wrongdoing and has vowed to vigorously defend itself against the charges. However, the legal battle ahead is likely to be lengthy and costly, further diverting resources and attention away from the group's core businesses. The Adani Group's ability to raise capital in the future is also in question. Investors may be hesitant to provide funding to a company facing such serious allegations. This could hamper the group's ability to finance its ambitious growth plans. The indictment has created significant uncertainty surrounding the Adani Group's future, and it remains to be seen how the group will navigate this challenging period. The indictment of Gautam Adani marks a pivotal moment for the Adani Group. The allegations of stock manipulation and fraud, if proven, could have severe consequences for the company's future. The group's ability to operate effectively, secure funding, and maintain its standing in the market is now uncertain. The immediate challenge for the ADANI Group is to address the concerns of its investors. The group needs to provide a clear and convincing defense against the allegations, while also taking steps to enhance transparency and corporate governance. It remains to be seen whether these efforts will be sufficient to restore investor confidence. The legal battle in the US will likely be protracted and resource-intensive. The outcome of this legal battle will have significant implications for Gautam Adani and the Adani Group. A guilty verdict could lead to substantial fines, penalties, and reputational damage. The Adani Group's future now hinges on its ability to navigate these challenges effectively. The group needs to demonstrate its commitment to ethical business practices and regain the trust of investors and the market. The road ahead is uncertain, and the Adani Group faces a defining moment in its history.